Now, whenever the sale are made on interstate basis or provision of services are to be made from one state to another, then there will be IGST, that means integrated GST, and it is to be enacted by the central government. So here we discussed earlier that it is a dual control mechanism. Whenever the goods are traded and the services are provided within the state, there will be CGST and SGST. That means total GST is to be segregated between the central government and respective state government in proportion of 1:1. Whenever the goods are traded from one state to another or services are being provided from one state to another, there will be IGST, that means integrated GST, and it is to be collected by the central government. Now, we know that in India we have different area of union territory, different states which is called as union territory, such as Diu, Daman, Deep, Andaman, Nicobar, etc., Pondicherry, etc. And for them, SGST is to be replaced by UTGST, that means Union Territory GST. And for making sale of goods in Union Territory and for providing of the service in Union Territory, the total GST are to be segregated in two parts, CGST and UTGST. CGST is to be collected by the central government. Since Union Territory, since the law and administration of the Union Territories are controlled by the central government, UTGST are also to be collected by the central government. Now, IGST will be apportioned between central government and state government in the manner provided by the Parliament law as per the recommendation of GST Council. What does it mean? Here we know that whenever the goods are sold from one state to another or service being provided from one state to another, there should be IGST. Here we have to take this fact in our mind that GST is a destination based tax. That means where the goods and services are being consumed, that means in the state where the goods and services are being consumed, that state are eligible for getting half of the portion of the GST and other half portion of the GST are to be credited in the account of the central government. Now, whenever the goods are sold from one state to another or service being provided from one state to another, there will be IGST. Now, here the IGST are collected by the central government. So, total GST are being collected by the central government in that way. Now, let us assume that the goods are sold from West Bengal to Bihar, and that goods are finally consumed in Bihar. Here, at the time of the sale of that goods from West Bengal to Bihar, at the time of issue of the invoice, the seller will charge GST, IGST in the invoice, and these IGST are being credited in the account of the central government. Now, since the product are being consumed in Bihar, Bihar state government are eligible for getting 50%, half of the portion of the GST. And here, central government will credit 50% of the portion of the GST on account of the respective state government. That means here on the account of the Bihar government. So first, by way of IGST, central government collect the entire amount of the GST, and then 50% of the portion of the GST are being transferred to the account of the government, respective government, where the goods are finally consumed. So IGST will be apportioned finally between central government and state government in the manner provided by the Parliament law as recommended by the GST Council. Here the process of transfer, I repeat again. First, central government collect the amount of the IGST whenever the goods are sold on interstate basis, and then this IGST is to be 50% portion of the IGST is to be transferred on the account to the account of the respective state government by the central government where that product is being consumed. So IGST is to be apportioned between central government and state government in the manner that is provided by the Parliament law and as per the recommendation of GST Council. Now, GST will be levied on all supply of goods and services. That means it is to be applicable on all supply of the goods and services except alcoholic liquor for human consumption. That means for alcoholic liquor for human consumption, that is the alcoholic liquor which is used for human consumption are not covered under GST Act, and for sale of alcoholic liquor for human consumption there will be the state tax and other tax at which is to be imposed by the respective state government. Now, the explanation to the Article 269A of the Constitution of the India provide that import of the goods or services will be deemed as supply of the goods or services or both in course of interstate trade or commerce. In case of import of the goods, IGST will be levied along with the basic customs duty. It means IGST is levied in replacement of countervailing duty plus special countervailing duty. In case of import of service, only IGST will be levied. Now, here for importation of the goods and services, it is to be taken as deemed supply of the goods or services or both in course of interstate trade. That means whenever the imported goods are cleared from the port, are cleared from the control of the customs authority to the domestic tariff area, it is being treated as making sale on interstate basis. It is deemed to be considered as supply of the goods on interstate basis. That means the goods are traded between one state to another state when the imported goods are released from the custom station to the way of domestic tariff area. Now, since it is being deemed as supply of goods on interstate basis, IGST will be applicable for importation of the goods. Now, in case of importation, we know that there will be the customs duty also. Basic customs duty are levied for importation of the goods in India, and now these basic customs duty are levied by the respective customs authority when the goods are coming to India after crossing the Indian territorial water. Now, after charging the basic customs duty, when the goods are cross the Indian territorial water at the time of import, then these goods are being controlled by the respective customs authority, and when these goods are discharged by the purchaser from the custom station towards the domestic tariff area, it will be taken as deemed supply of the goods from one state to another state, and for which IGST is to be levied. That means for importation there will be IGST along with basic customs duty. It means IGST levied in replacement of countervailing duty and special countervailing duty. These duties was charged at the time of importation at pre-GST regime. That means before implementation of GST, at the time of importation of the goods, there was CVD and special CVD, and these two duties are being replaced by IGST now. So in brief, at the time of importation of the goods, it will be taken as deemed supply of the goods from one state to another whenever the goods are cleared from the custom station towards DTA, domestic tariff area, and since it is being treated as deemed supply of goods from one state to another, IGST will be imposed on importation along with basic customs duty.